Hello and welcome to another episode of the Real Estate Investing Club, the place investors go to gain actionable advice, learn about current market trends, and hear war stories from other professional investors out there in the field today. Before we get started, I have two quick housekeeping items to cover. First, if you like the episode, we would very much appreciate a like, subscribe, and share. It is the best way to support the show and keep it running. Second, if you are a new investor looking to get started in real estate or an experienced investor looking to take your investing to the next level, we created an ebook for you that will cover how to find deals that are actually deals, how to finance those deals with little to no money down, and how to exit those deals for maximum value. On top of that, I throw in an insane amount of free bonuses that you'll have access to once you buy the ebook. All we charge is our admin cost to keep the show running. So, if you're serious about real estate investing and want to create both active and passive income as an investor, head on over to the website at therealestateinvestingclub.com and click on the button that says Get the ebook to grab yourself a copy today. So with that said, let's dive right in. Today we have a very special guest with us, ready to drop some investor knowledge on you. So buckle up, grab your pen and paper, and enjoy the ride. All right, we are live. Today we have with us Jonathan Tuttle. Jonathan is a mobile home park fund business owner. He is an investor, speaker, upcoming author, and a maverick in real estate. I am excited to have Jonathan here to talk a little bit about mobile homes. Jonathan, thank you for helping on the show today. How are you?
Great. Thanks for having me on. I'm really excited to be here.
Absolutely. Yeah, I'm excited to jump into this. So I always start, I ask people, give us a little background about yourself, where you are right now, and how you really got started in real estate way back in the day.
Sure. I guess the foundation started from my dad. Was that when I was like 5 years old? I'd be on the job sites. He was a broker. He also flipped like 30 some houses. So starting off at like 5, 6 years old, I would literally be boots in the ground. That was where I would learn my education from this, the ground up basically. Then later on, he's ended up started getting in the mobile home park space about 2006. And it just really was intriguing. I was in retail at the time. It was just a really intriguing niche. When you think about it, like logically, it just made sense. Affordable housing that serves a big portion of people, and you can't develop new ones. So he got his first park then. We bought a couple parks as a family over our next 5 years. And then this year, we started our Midwest Park Capital as a mobile home park fund. So.
Yeah, that's awesome. Sorry, I'm getting a little bit of reverb on my end. So let me just fix that real quick.
Sure.
All right. I'm always jealous of people. I hear they had a mom or dad who, was a real estate agent, a real estate investor, contractor, something like that, and they had this in. So I'm jealous that you got that start. That's, especially that your dad was into it in 2006. That's way before it became like a thing. Like investors, mobile home parks seem to be a little bit more not mainstream, but popular these days as far as an investment strategy.
Yeah, his biggest regret, he says he wished he got into it in like the 80s, like when Sam Zell did. I probably wouldn't be having fun. I'd probably just be living easy here.
Yeah, I mean, that's what we're focusing on right now. So there's still great opportunities. So I'm excited to jump into this. So kind of dig a little bit further into your story. Your dad was a contractor. He started in 2006. You were working retail at the time?
Yeah, at that time I was this women's clothing store called BB. It's I was the number one seller in the country for a couple of years, and it was good. It was a good foundation because it was a suburb outside Chicago, but it was really building sales skills, and it was actually good money at the time. It was for what I was doing, and I knew I was going to always transition. Even when I was telling my friends, mobile home parks, they're like, "What is that? What is that? That doesn't even make sense." I'm like, they're all asking now. When I was telling them 15 years ago, like, "You're so right," because like you said, it's now become mainstream. Mm-hmm. But back in the day, it was like, "What are you talking about, mobile home parks?" And that was even before the TV shows came out. So So I went to retail, and then I got into real estate around 2010, and just did mostly residential for the first 2 years, then switched over to commercial. I was fortunate enough to get in the Sperry Van Ness, Chicago, which was the biggest office in the country. They had the national coach there. So I had like literally every asset class in commercial real estate. I had coaches and mentors. And then after that, I partnered up with probably the number one broker in the country, James Cook from Realty in the mobile home park space out of Florida. Tremendous mentor. So I basically had this huge foundation from starting with my dad and getting involved in the space with my dad, and then going to Spirit Van Ness, where it was like the top firm out of 185 locations, and then parting up the number one broker in the country. And then now I have my own fund. That was the ultimate goal. The real value, like you're saying, is just really owning these. It's a tremendous opportunity. If anybody's listening that's thinking about getting into it, it's a great, great niche because you're helping people that need it. It's non-subsidized, so we're helping people that need it. If you make $10, $15 an hour, it's the only solution. So, and at the same time, you can't develop new ones. So you have this moat, which Warren Buffett, that's why he has $2 billion companies in space, because you can't develop new parks. So, huge demand, low supply, it always works in your favor.
Yep, absolutely. I mean, that is you kind of summed it up very well. Why mobile home parks are so exciting. But there are mobile home parks being developed. I actually have a few people out here, surprisingly, that are developing. But mostly, you're right. People are not. They're not adding additional mobile home parks across the country, which is why these are the ones that exist are so valuable.
Exactly, and I didn't hear about that. I know there's different data. I've heard about 10 in the last 20 years, but a lot of it usually is like a conversion where it was like an RV or it's kind of like some weird grandfathered land is probably the case. And they probably had it in with like the city officials, like, hey, we need affordable housing. But generally speaking, yeah, it's a crazy niche because people don't want it in their backyard because there's a stigma behind it, but it actually starts to need. And if you go to some of these parks, they're actually really nice. Like There's obviously different qualities of parks. But you have like some that are like called, 5-star, Class A type for mobile home parks, which means like a nice property. And they're like $100,000, Clayton Homes, just like Warren Buffett's company. They're beautiful houses. Or actually, if you go to every year in Louisville, they have the trade show. If you walk through that, you would not know you're in a mobile home, like the new models.
Oh, yeah. The new ones for sure.
Yeah.
So I know you and your family own some. Now, in addition to the fund that you run, take us to like kind of the first acquisition that you were part of. How did that go? How'd you guys find it? How did you do how'd you underwrite it? Just kind of walk us through the process there.
Sure. It's actually, we're raising the capital raise for the fund. The fund just launched. So we're still in the capital raising component. We're raising $10 million.
Oh, nice.
But the first one underwrote when I was with James, we underwrote a tremendous amount because we would literally drive through each park and literally just we rent a car and we map out, do a map quest, and we literally drive through every single park.
Oh, wow.
Knock the doors, see if the owner is there, start a conversation. Wow. And then you get them on your list, and then you follow up with them every few months and say, hey, how's everything going? Anything changed? For underwriting, the underwriting this is different than other asset classes because there's always, here's an advantage too that most people don't know about. Mobile home parks is mainly land. That's what you're basically want it where you don't have all the units that you actually own. So they have a 15-year tax depreciation schedule on land, and comparatively, multifamily is 27.5, and then traditional commercial real estate is 39 years. So on your K1s and your taxes, the land, so that's also, when you're underwriting the property, you're going to have this extra, basically just that's an extra income for you because you're not getting taxed at like the normal tax. And also in that, was it the 2017, the new bonus depreciation that came out. So depreciate 100% for one time only for 1 year.
Oh, wow. So, I thought that was only related to RV parks. Is it also related to mobile home parks?
Yeah, we're going to test it I got to talk to my CPA, but that's from my understanding, yes. It's supposed to be all real estate. And it's like, talk to your CPA, but I'm almost positive that you should be able to.
That's really cool.
So,
So again, go back to the mobile home, the first mobile home park that you bought yourself. Where was it? What was the pad rent? What was the pad, the occupancy? Take us through the numbers there.
Yeah, this is actually a good story that kind of like was a case study. It was in Tuscola, Illinois. It was actually like gravel roads. It was all the ones now, obviously. It was like a first park just to kind of test the waters and see if it actually was. Before, there's Frank and Dave, everyone kind of knows them as like the mobile home guys. There was actually a book before that they bought. I can't remember the name of it. I have it somewhere like in storage, but it's like the original mobile home Bible, basically. And they basically rebranded as Mobile Home University. But yeah, based on that, we had that. My dad's like, let's try this and see how it's going to work, basically. From my recollection, because it's been a while, I think it was about well, it wasn't fully occupied first, 45 or 47 units. I forgot exactly. And we had about 8 or 9 that were not filled. And we had the lots, but there were no units there. But luckily, there was another big owner right outside, like 30 minutes away. It had like a 550 unit park. And he basically
550 unit park. Wow.
Yeah, he owned a dealership in town. An apartment building across the street. He was making money. Yeah, I mean that park. Yeah, it's definitely worth probably 30, 40 million right now. Probably 30, 35, 40 million alone. And obviously he's had it for 30 years, so it's straight equity. Okay. Yeah, so he literally became friends with my dad. And like he says, why don't you take him out? Because he's putting new ones in. So we got him for free. My dad would be boots on the ground. Because I was at retail at the time, but he would be down there. He'd live in one of the units, do boots on the ground, clean up the park, basically, implement the rules. Number one, making sure like the old owner was kind of hands off. He came in, made sure the rules, everything was. Here's the expectations going forward. Get the bad apples out of there. Bring in the new units. Or actually, they're still older units, but newer for the park. And really, at that time, Facebook wasn't like, cause one technique you use now is like Facebook and Craigslist as a way to market and bring in tenants. But at that time, it was still like the newspaper and actually still being boots in the ground. So he'd go down there and live down there for like 2 or 3 months. We bought the park for like 480, and in the original cash flow, I think the rents were like 120, and ended up at the end when he sold it was like 225 and sold it for 980. And this is like 2000. And the thing is, he bought it in 2006, like I said, and then sold it during when the real estate was still not turning around. So all these other real estate was really down in like 2010, 11. He was able to double the cash flow. Plus, he had it for a couple of years. So he didn't have the huge tax burden and double his money. He's like, all right, now we got to get 2 more now.
Wow.
One day, right? My dad didn't know about that. As long as he's been in real estate, he didn't know about the ones that one.
Yeah, that's so why did he decide to sell?
Offer is too good. Yeah.
That makes sense. So
basically $1 million profit in 5 years, and like on a small investment for what it relatively was, and it ended up being just like a passive cash flow. And he's like, all right, I should have been doing this. Like I said, he wished he would have gotten to it 30 years before, because just imagine, how many more parks he would have.
Yep. Yeah, that makes sense. I'm in that position. I mean, it's not a mobile home park, but just a duplex here in Seattle. I got an offer that's just ridiculous, and so I'm like, well, I guess
sometimes you gotta take it. Yeah, because you never know. I mean, if somebody's overpay or whatever, like, here, go for it.
Yeah, exactly. You never know what they want. That's cool. So, I mean, that was a long time ago. You guys have purchased a few parks since then. What is you're running the parks now? How many do you have under management right now? 2 right now. It's just a family smaller parks, about 100 units right now. So okay. we're probably gonna, because my dad's older, he probably is gonna 1031 it. So we're not gonna say where they're at, and then probably get something in Florida so they could be a passive, get a bigger, because all the equity is built up, and get something bigger. It could be basically enough that the key with the parks too is you want to make sure you have enough units where the management, because for him it's more, if it's a smaller park, it's a lot more labor intensive, and you don't have enough cash flow. If you want to really run it efficiently, you want to have somebody that's on there all the time, or some kind of management structure. And he still likes it because it keeps him busy, but he also wants to kind of, fruits of his labor, kind of like, hey, I want to, fully retired. Like, even though he's retired, he still is down there all the time. Yeah. So. Yeah, no, I mean, that makes complete sense. In Florida, oh my God, there are so many freaking parks in Florida. It's ridiculous. You're 100%. I think there's total, correct me if I'm wrong, I think like 8,500 between RVs and mobile home parks. Yeah, I've something like that, or 5,500. It's something crazy. There's about officially, because the data is not aggregated data. There's not a lot of data sources, like even if you use like LoopNet and all that stuff there, because it's the good old boys. A lot of these are grandfathered in, so they don't. And the people that own them, they don't want to give out the information, because then they get all the brokers calling and everyone else calling, hey, do you want to buy it? I want to buy it. I want to buy it. So they don't want to give out the information. So a lot of the data is kind of like guesstimated based on a few people putting their numbers together. But approximately about 44,000 parks in the country. I think it was 55 or 85 in Florida. And for comparative analysis, just like Illinois only has about 800 approximately. Yeah. And there's obviously some like 5 or 10, 20 ones that they kind of went on the table, but that's kind of like the numbers that people believe out there. Yeah, no, I mean, I would not be surprised if it was 8,500. We market nationally, and I swear to God, like 1 out of every 3 parks that comes to us is from Florida. It's like
I believe it.
it's ridiculous. But yeah, Florida. I mean, it's also just a really great market, especially right now.
Yeah.
It's kicking butt. It's like there's great appreciation, great cash flow. So sounds like your dad's making the right move.
Yeah, and going to your what you're saying, Florida too. You get a lot of people that if you ever drive through some of these parks, if people in Florida will be familiar with this, you'll be completely blown away. Some of these parks will have like lakefront, like they're like resort areas.
Yeah.
So that's when they're selling it, they're actually getting tore down for. Sometimes we'll get tore down for like a hotel property, resort type property, because it's literally prime like Florida beachfront property, and they're like a mobile home park, and like what?
Yep.
These people are living like on the lakefront or a nice like
Yep.
nice living here for $500-600 a month. It's crazy.
Yeah, we had a lady call us. It was like a 30-unit park. And we ran the numbers and we came up with an offer and we sent it to her and she just like laughed in our face. I was like, I thought that was a pretty good offer. You have a really older park. This is a 10 cap. It's your park needs work. And she says, but you don't understand. Like, I'm going to sell this to a developer for 5 times what you just offered me. And I'm like, that makes sense. That makes sense because it was right on the water. It was like it was prime location. I wasn't thinking in the terms of development, but these parks they're in great locations down there.
And I would come back to her and be like, so you don't care about your residents when you want them to have a place, do you want them getting kicked out or would you want to keep your name and legacy?
Yeah, exactly.
Flip it back. The money's not everything. I'm sure you have plenty of money because you've had this for X amount of years and you're getting this nice payday. Why don't you, take care of the residents and let me, I'll keep the name of the park. I'll keep your residents in there.
You're a better negotiator than I am.
Keep the emotional component to it.
Awesome. So why'd you guys jump into the fund?
The fund was like, I've always been one, I just want to get as many as possible because I love the whole niche and I love the, the ethical profits and serving the niche. And it's a way to scale, a lot faster than just individual money, basically. So, and there's a lot of people that want to get in the space, but they don't have the time, the resources, or they don't have the, they don't want to put $1 million, $1.5 million to get this first, smaller park down payment. They get test the waters, $50,000 or minimum initial is $50,000. It's for them to kind of get familiar with the asset class. And if they want to get a park later on, they could do it. But we do all the management. We actually have the top third-party management in the country that's going to help run it with us. We have everything is handpicked, seasoned, best of the best. We have a park CPA that runs a big fund and runs ours. Fund administration software is the top. And basically we want to provide a solution for people that just want to get help people that need it and have, collect checks quarterly, get the nice K1s, because remember it's 15-year depreciation on land. And then over the course of the 8-10-year hold, we're hoping for, 15 IRR or higher. So, and it's APREP. So the investors get paid first. It's a 70-30 split. So we do everything for the investors. And then for us, it's just like, this is the time to do it. Like if you're going to get in the park space, you have like a 5-year run. We know institutionals own about 2 to 3%. We don't know exact numbers because, like I said, hearsay, but it's about 2 or 3%. You have Carlyle Group in it. You have Apollo. You have the biggest hedge funds in the world now getting into this space because they see the demand for it. And if that doesn't tell you something, if the biggest investor, the biggest funds, you got the biggest investors, Warren Buffett's got two separate billion-dollar companies. And then you have Sam Zell, which is considered the greatest real estate investor of all time, who previously was the biggest, or I think he still is, the biggest multifamily owner in the country, the biggest office owner in the country, and the biggest mobile home park owner in the country. However, he sold off half his multifamily in the last 5 years and half his office space. So that tells you, which is pretty brilliant. He's always, doing the right moves, but he's still keeping all his parks and he's acquiring more. So if all the smart money is doing that, so we have this, like you're saying, with these people, like she's getting these offers for redevelopment. So it was about 1% or approximately are getting torn down every year. So like it's shrinking. And then you still have like a 5 years before it gets consolidated. And just to give you an example, compared to self-storage, which is like a lot of people compare us to in terms of like return and safety, they overbuilt in the last couple of years because there's been such a institutional money. You could literally just buy a lot and there's not the zoning restrictions like mobile home parks. You could buy, and so like the big U-Hauls, the self-storage, they could just go and they do demographic searches. Yeah, and they just buy land and build up. Right. So, but for us, so that it's kind of consolidated 3 times more. I heard recently 3 times more, and we're 2 decades older industry. So we're still behind that lag, but that means we have a couple years to really take advantage of this opportunity.
Yeah,
So,
now's the time. We're doing the right
yeah,
moves here. I
exactly.
love it. Awesome. Well, hey, we are at the end of the podcast. We've already blown through that 20-minute mark, so I have to move us on to the end. I love the conversation, though. I'd love to have you back on once you get this fund up and running.
Yeah, definitely.
But going into the quick question round, this is where I ask you quick questions. You give me quick answers, and it starts with books. I always ask people favorite book. So give me one favorite book for real estate, one favorite book for general life wisdom.
I would do Sam Zell, since we're on the mobile home park niche. Am I being too subtle? And he gives a story and how he thought of when he was acquiring the properties and how he thought of the angles and his real life, just his story basically. And it's an incredible story. And then for probably my favorite book that for entrepreneurs, it's pretty known, but it's more tech. It's called Peter Thiel, 0 to 1.
Oh yeah.
Yep. So, and he's kind of being like, his whole premise, he's the founder of PayPal, obviously. He was like the first investor, one of the first investors of Facebook. So he's always a visionary. His whole thing is like just trying to think outside the box and be more of an innovator in the future who could solve problems. And it kind of ties back into the parks, like always think, how can you solve problems and how can you be innovative and how can you find that, that blue ocean basically where you have less competition. So it kind of ties into our niche and also kind of how to be an entrepreneur and actually not have to work as hard. You have to work your ass off, but like work less, because you could find that
work smart,
easier path. Sorry to swear. Yeah.
Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com. So if you are interested, head on over there. With that said, let's get back to the podcast.
Yep. No, I love it. Going on to the next question. This one's about your younger self. So if you could go back to the Jonathan who was just working retail back in the day, working the job, go back to him, give him one piece of advice moving forward. What would that piece of advice be?
Well, I always believed in myself, and that job gave me a lot of confidence when I hit number one. But when I got out of that niche and first in the real estate, I wasn't as confident. Like I didn't believe in, like I always listened to other people. Like even with the parks, I would have gone fuller into it because I had listened to other people who none of them actually did like crazy entrepreneurial things themselves, but just actually listened to them, followed through more, which I did, but it kind of made me second guess things a little bit. Even when I was first starting out and getting in real estate, and I got in real estate 2010, which was like the downturn of downturns. I was like, am I making the right move? And it was, just to build up that, that courage and that tenacity and that grit, which was good, which is great for now. And actually being in the right niche, but going back to that older self or younger self of me, would be actually just be like, I know what I'm doing. I know I'm doing the right path. I'm going to full force with it and not listen to other people and not let them slow me down. So any entrepreneur, focus on you because people are either going to be, most of the time people are going to doubt you no matter what. And then when you keep, your biggest haters are going to probably be your closest friends. And then they're going to be like, how'd you get there? Well, you didn't believe, and now I got there because I did all the work and I executed.
Yep. No, I love it. Trust in yourself and I'll always take other people's advice into consideration, but you're the last one. You're the one that actually has to make the decision. You're the one that needs to go forward. So love that piece of advice. Next question is about habits. Habits are the foundation of our life. So if you could point to one habit that you feel has contributed the most to your life today, what would that habit be?
I think this works for everyone. This is a key. It's the time management. You got non-refundable minutes. So everything you time block, and if in regards to time, making sure all your time in the day is blocked off, respect your time. So like even like with social media, people take little breaks and it's like 2 minutes here, 2 minutes here. And they know that, the tech developers know that. But at the end of the day, you spend 2 minutes here, 2 minutes here, 2 minutes here per every hour. The next thing you know, in the compounds, you waste hours per week doing stuff that you didn't get any value out of. You got mentally stimulated, your endorphins get kicked up, but you're not actually accomplishing something. So having the time blocked and hitting those goals, you'll accomplish a lot more because you're going to be like, I'm so efficient and I'm blocking everything out that's not, I can't get those minutes back, and doing stuff that's productive and moving me forward. And so having that time blocked, being efficient with it, understand that other things are distractions. And then you can do that when you accomplish everything in the day, but at least you've accomplished everything because you didn't waste time during the day. And that'll get you so much farther ahead than just kind of like going through the day. Yeah, everyone has a calendar, but like really pay attention to your minutes and seconds.
Yep. No, I love that. I always, I have a routine in the morning, and after I do my morning routine, I will just time block up until 10 a.m. and I have just one thing that I need to accomplish during that period. Then once 10 a.m. hits, do the team meeting. And from that day forward, I can go to where the fires are, but you block off that piece of time, get what you need to get done, and then deal with the fires that are happening. Love that piece of advice. So next question, everybody's good at some things. If you could point to one thing that you feel you are absolutely kick-ass at, what would it be?
I would say digital marketing, Facebook ads, and SEO.
Nice.
I've spent so many, I wanted to learn it, and that's why I like the Peter Thiel book. I wanted to learn the technology angle because I could give me a competitive advantage and keeping up with trends, because everything now you're teaching in school, and I even actually teach at schools. I was supposed to speak on the national stage for digital marketing, how to fill up your parks at the Manufactured Housing Show in Vegas. With the other speakers was Dr. Ben Carson, the national director of HUD, and the other speaker was Warren Buffett, CEO of a billion-dollar company, Clayton Homes. So that side of it gives me a competitive advantage on the technology side, and like going back to that technology, have it make you money. So save you time and being efficient. So yeah, Facebook and digital is like one people probably know that about me, but like that's probably my biggest strength.
Oh, I love it. You're speaking my language. My background's actually in digital marketing. So
okay.
I like that.
Cool.
Right on. So that is the end of the round. Last question is for the guests. You've given us some great advice so far. So if you could, if somebody wanted to reach out and get in contact with you, what would be the best way for them to do that?
Yeah, since we were talking about the fund, it's called Midwest Park Capital Fund.com. And that's the one that actually has the portal. They could, if they're a credit investor, they could actually go in there, and we have the company updates, and everything's in real time. Or if they just want to find a little more information about mobile home parks, we have another one. It's more of an informational website. That's MidwestParkCapital.com, just how it sounds. Or in Facebook, Jonathan Tuttle. I think it's Jonathan Tuttle Official, and it's Jonathan Tuttle on Instagram. So
awesome.
I'd love to connect with anybody, ask any questions. It's my passion. I'm here to help, and solving problems and helping people, and it keeps you something to look forward to every day.
Absolutely. So if you guys want to get in contact with Jonathan, I will put his URL in the show notes below. So if you want to click through there, go and click through and say hi to John. Other than that, Jonathan, thank you very much for hopping on the show. For everybody who is here with us today, man, my tongue is tied. For everyone who's here on the show with us today, thank you guys for showing up. We couldn't do this without you, so thanks for being here. Again, the best way to support the show is just to subscribe, like, and share this episode with your friends and family. Other than that, I hope you guys have an absolutely fantastic day. Keep kicking ass in real estate, and I look forward to seeing you guys on the next episode. Thank you for joining us for another episode of the Real Estate Investing Club. I hope you guys enjoyed the episode and were able to pull some actionable advice that you can go home with and apply to your own investing business. Before you go, I have a gift for you. If you're a new investor looking to get started or an established investor looking to take your business to the next level, I've created an ebook just for you available on the website. This ebook will cover how I was able to create both active and passive income in real estate with very little money to start with. In it, I will address the 3 most often cited obstacles new and veteran investors run into by showing you how to find a deal that's actually a deal, how to finance that deal with little to no money down, and how to exit a deal for maximum value. And if you get the ebook today, I'm going to bury you in bonuses, 7 of them to be exact. The First, you'll get the off-market lead generation blueprint, which will take you through the exact systems and processes we use to generate off-market leads like clockwork, which is the most important skill when it comes to creating real wealth in real estate. Then you'll get the A to Z REI systems and vendors guide, which will allow you to peek under the hood of our business and see the exact tools and systems and even the vendors we use to grow our business. After that, you will get the top 100 best performing keywords pack, which will give you the exact keywords we use to target leads online and generate leads without having to lift a finger. Next, you'll get the contracts bundle for wholesaling and renting real estate, which will give you access to all of the contracts we use in the field to execute all types of transactions. After that, you'll get the Investor's Quick Analysis Calculator and Offer Tool, which will allow you to quickly calculate whether a deal is an actual deal and will allow you to create an offer automagically from those calculations. Next up, we'll give you the Investor's Daily Success Tracker, which is a tracker you can use to ensure you are taking the right actions day in and day out to reach your financial goals in real estate. And finally, you will get the Wholesaler's Template for Quick Assignment Cash, which will give you the templates we use to present our wholesale deals professionally and efficiently to our buyers. I know that is a ton of things to say. I'm glad you were able to stick with it. So you'll get both the ebook and all of those 7 free bonuses when you download the ebook today. All we charge is the admin cost to run the show. So if you are interested in the ebook and the bonus bundle, head on over to the website at therealestateinvestingclub.com. Click on Get the Ebook Bundle at the top of the page and take advantage of that deal. With that housekeeping item covered, I hope you have an absolutely fantastic day and even better week. Keep rocking real estate, and I look forward to seeing you on the next episode.
All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at gabe@therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.